Good morning traders, it's Carlo from Blueberry with your week ahead and what's likely to be top of mind for traders this week. The biggest driver this week is a cluster of major central bank decisions as well as headlines surrounding Iran and oil prices. Taking a look at the economic calendar, some of the key macro events will start to ramp up from Tuesday. Tuesday we have the Reserve Bank interest rate decision, where the current cash rate is at 3.85%. Market expectations around 80% probability that the cash rate will be increased by 25 basis points to 4.1%. In fact, after recent comments from Deputy Governor Hauser, who identified that high oil prices may be inflationary and a concern for the Reserve Bank, all the major four Australian banks are now calling for a rate hike this Tuesday. The RBA decision could trigger sharp moves in the Australian dollar and Aussie crosses, as well as the ASX 200. And also keep in mind that comments from the Reserve Bank Governor Michelle Bullock afterwards will be closely watched to see whether the Reserve Bank remains hawkish and their view on inflation and energy prices going forward. Next on the calendar, we move to Wednesday US time and Thursday Australian time. Starting off with the Bank of Canada interest rate decision, market consensus is for rates to stay unchanged at 2.25%. So the Canadian dollar is in play. We did have some very soft employment data on Friday night. The next major central bank meeting is from the Federal Reserve of the United States. We do have the Fed interest rate decision, as well as the more important economic projections or dot plot projections. Now, the current Fed funds rate stands at 3.75%. It's actually in a band of 3.75%. No change expected. However, the dot plot projections, as mentioned, and the forward guidance will matter more than the rate decision itself. And traders will likely have to watch how policymakers respond to rising energy prices and geopolitical risk and uncertainty. The US dot plot projections will be key to determine what is next for US currency pairs and US equity markets and gold, silver. The next major data release on Thursday is New Zealand GDP, where markets do expect a lift in economic growth to 1.5% annualised. We also have Australian employment data, plus 20,000 jobs is market consensus, followed by the Bank of Japan's interest rate decision. The Bank of Japan is also expected to remain on hold with the cash rate at 0.75%. And on Thursday, we finish off with the Bank of England interest rate decision. Now, you may recall that the Bank of England monetary policy statement, the vote was split last time. It was very tight, so the debate rages over whether inflation remains too sticky, and traders will watch the vote breakdown and policy statement afterwards. But the cash rate is expected to remain unchanged at 3.75%. And finally on Friday, the ECB monetary policy statement, where the cash rate is currently 2%, not expected to change, and traders should be focusing on any comments surrounding rising energy prices. Let's now take all that information and analyse some of the key products that are likely to be top of mind for traders this week. Firstly, the gold daily chart. As we can see here, with gold, we've seen prices move sideways the last week to down. There are two competing forces at play here for gold. One is typical safe haven demand that gold does receive when there is geopolitical tensions globally, as we are seeing right now with the Iranian war. But secondly, markets have repriced the Fed rate cuts. Now, remember, there were two rate cuts factored in for 2026. However, with the increase in oil prices above $100 a barrel and the escalation in the Iranian war, the markets are now starting to price out these rate cuts for 2026. In fact, we do have the Fed Reserve meeting this week, so all focus is on that. And that second factor is winning out right now. Gold has been sold. US dollar is strengthening against gold, as we can see here. The 3-4 candles falling. The stochastics oscillator has just dropped off the cliff. It is now below that 20 level. So that suggests that it does support the recent drop in gold prices. The key levels to keep in mind for traders going forward for the next few trading sessions up until the Fed policy meeting is 5,000. So we're currently around 5,020, but the 5,000 US an ounce mark is important. And then in blue, this 50-day exponential moving average support comes in around 4,925. For those of you trading oil, I have the West Texas crude daily chart in front of me. Now you can see last Monday, we saw that huge spike up to almost 120 US a barrel, only to fall down to just above 80 later that evening. So oil prices have been extremely volatile. You might want to throw the chart levels out the window because it's all about what is happening around the Iranian war. It's a supply issue. Can the US Navy support any oil tankers going through the Strait of Hormuz? But the markets will, oil prices will certainly remain sensitive all week to what is happening out of Iran and the Strait of Hormuz. Taking a look at the currency market, I have dollar yen daily in front of me. As mentioned last week, conditions have been very supportive for dollar yen. US dollar safe haven status and high oil prices hurt a large net importer of energy such as Japan. So dollar yen has been trending up very strongly. As you can see here, the 20-day EMA has been diverging away from the 50-day EMA, and stochastics below, one of the momentum indicators, continues to remain above the 80 level, suggesting decent support and upside momentum to the current movements in prices. Now, dollar yen is currently around 159.54. Resistance is at key 160, 161 level. We do need to expect some kind of increased rhetoric from the Bank of Japan and also the Ministry of Finance as to intervention. But whether that will be successful or not is a different matter. So for traders, they're the key levels to keep an eye on, and watch out for increased rhetoric from the BOJ and Ministry of Finance. Let's now flip to the Euro-US chart. As you can see here on the dailies, a very strong downtrend in the euro, where the EMAs did cross over here on the 4th of March, and prices have been falling quite steadily, with momentum indicators, stochastics below 20 level, suggesting that there's more support to this current downside we're seeing in euro versus USD. In terms of possible targets for traders who are short euro USD, previous swing low region here, made in July last year, comes in around 114, the figure. Of course, all eyes will be on the Fed Reserve meeting this week to see whether this downtrend in euro US will continue or not. My final currency chart is the Aussie versus US dollars. As we can see here, in the middle of last week, the Aussie almost breached 72 cents, then fell down sharply. So I believe the Aussie has also fallen victim to a high US dollar story, where the US dollar, as mentioned previously, has gained as markets and traders have priced out any rate cuts for 2026. Is this also a case of buy the rumour, sell the fact? So you can see the Aussie did enjoy a nice upswing for the majority of last week, especially after Deputy Governor House's comments, where he was worried about high oil prices leading to inflation expectations in Australia. But since then, traders have taken profits ahead of the RBA meeting tomorrow. So the RBA meeting tomorrow will be closely watched, especially the press conference by the Governor, Michelle Bullock, afterwards, to see whether the Reserve Bank of Australia does remain hawkish, and is there a possibility of another rate hike in May if they do indeed deliver a hike tomorrow. So expect further heightened volatility in the Aussie crosses, and also the ASX 200. A quick look at US equity markets, in particular the Dow Jones 30. You can see here the Dow Jones has been trending down quite strongly since its peak of about 50,000 on the 10th of February, with stochastics also having strong downside momentum, currently below the 20 level. Now, the war in Iraq, high energy prices haven't been positive for equities in general. That's why we have seen the fall in the Dow. We also saw the EMA crossover here at the beginning of March. For those of you who expect further downside moves in the Dow, this area here may be first target and certainly key support around 45,700, and then the swing low point here around 45,230. As always for traders this week, the key event is the Fed interest rate decision on Wednesday US time. That's my analysis for the week. It's a super week for central banks, and there are plenty of short-term trading opportunities for traders who stay disciplined, risk manage, and manage their capital. I wish you every success with your trading. Good luck, and I'll see you in the next video.